Last week was an interesting week, if only because we saw A, new all-time lows in the 10-year yield, and then B, a hopeful narrative that was perpetuated by Pump himself and the Larry Kudlow. Again, the data doesn't lie. Larry does. The yield curve, the shape of that, obviously led you to where we are in terms of economic stagflation. And the other big thing that's leading you right back there is this morning. The 10-year yield's no follow-through, okay? Back down to 55 basis points with a medium-term downside to 0.50%. The rate of change continues to fall. That's the volatility of oil's chart. It's green because, of course, right when we made the call in June 23rd, I believe, to get long commodities, of course, oil volatility, I should say, of course, it could have done the opposite, but it didn't, continued to fall. And you can see that utilities were one of the best places to be in terms of earnings growth because there wasn't much earnings growth. But again, if you were long Amazon and utilities, you did great because both had earnings growth, 8.9% there on the right column versus those bloody awful financials, which were down obviously over 30% with all 66 of them having reported earnings. Buy them when they go down because they go up after they go down. All right, so that's a pretty simple question to answer for you in the queue this morning. Copper went down a fair amount on Friday. I was actually pretty surprised, up almost 2% here this morning. And I don't particularly care what commodity I buy, which would include Bitcoin. It was up 2% last week and is making a new high this morning. I'll buy any commodity. I don't care what it is. And if it goes bearish trend, I won't buy that.